Unbiased Reveal channel. Welcome to the Deep Dive, where we take a stack of conflicting sources and give you the shortest path to being well-informed. I'm Jenny.
And I'm Peter. Today, we're strapping in for some serious volatility. We're looking at a market that really can't seem to make up its mind.
Yeah, it's going up or down. Okay, here's the quick take, the 30-second version. The global crypto market just pulled off a stunning move. It surged over $33 billion.
$33 billion?
Yeah.
In just 6 hours.
Exactly. Bitcoin, Ethereum led the way, but XRP had this 11% jump, enough to grab back the number 4 spot.
Right. And this is all happening just as the Fed starts talking rate cuts and ending QT. So the big question is
this it? The breakout? Or is this just a massive short squeeze before things head south again?
we've dug into the data. And hey, if you're thinking about trading in this chaos, remember we've got the best crypto referral link down in the description.
Okay, let's unpack this. Our mission here is to dive into that tension. You've got this big macro hope, right? The Fed's opening the taps.
Yeah, more liquidity coming.
But then you look at the charts, the on-chain stuff, and it's cautious. So we need to figure out what this crazy moment actually means for the market structure. Let's start with that shockwave. That $33 billion gain in 6 hours, I mean, that's not slow accumulation.
No way. That's like the market collectively deciding, okay, done sulking and just sprinting.
It signals a really fast, aggressive shift. Anyone betting against the market probably got wiped out right there.
Oh, absolutely. Liquidations everywhere.
Right.
And the speed itself was a reminder. Bitcoin sort of stabilized around, what, $110,700?
Yep, holding that ground. And Ethereum popped back above $3,850. It's trading near $3,898 now. Big
Wow.
psychological numbers.
Huge. But the real plot twist, like you said, was XRP.
Yeah, that 11% jump. Enough to actually flip BNB for 4th place.
Just barely. But yeah, XRP hit $152.2 billion market cap, BNB at $150.4 billion.
Why does that little flip matter, though?
Well, think about it. BNB's rank is often tied pretty closely to how well centralized exchanges are doing, right? Binance's health. XRP jumping up, even slightly, shows maybe there's renewed interest in assets focused on broader stuff like payments, institutional use. It's not just about the exchange tokens. Maybe a bit of a narrative shift.
Okay, narrative shift. I like that. But here's conflict point number 1. Analysts are already pouring cold water on it.
Yep. You're hearing that phrase, relief rally.
Exactly. They're not calling it the start of the big one. Why the caution?
Well, the relief rally label suggests it's mostly technical. You know, those shorts getting liquidated, institutions maybe just twinking their positions, tactical stuff.
So not driven by fundamental new demand, necessarily.
Not yet, according to them. They're saying, hold on, let's see if real buying follows through. But, regardless of the label, the cryptocurrency market has just served as a reminder to everyone of how quickly momentum can change. That part's undeniable.
Okay, so we have this big price move. If it's more than just shorts covering, something else must be going on. Which brings us to the macro picture. And this is where it gets really interesting, the timing.
Oh, absolutely. The timing is almost perfect. The rally kicked off right alongside some super dovish signals from the Fed.
The rate cut, 25 basis points. But you mentioned something else. Ending QT. Quantitative tightening.
Yes. And that's arguably the bigger deal here, ending QT by December 1st.
Okay, explain that for us. Why is ending QT potentially more impactful than a small rate cut? What's the history there?
It's huge. QT is when the Fed is actively sucking liquidity out of the system. Think tightening the belt.
Okay.
Ending that. Historically, the end of these major tightening phases,
Right.
that's often been the starting pistol for new bull markets. Think back to 2020. Once they started easing, risk assets just flew.
Right.
The Fed's basically signaling, okay, inflation isn't the main worry anymore. We need to support jobs, support growth. And that means more money sloshing around looking for a home in risk assets, like crypto.
It's like financial fertilizer, as you put it. Can we see that reflected anywhere else? Like in other assets, you mentioned gold?
Yeah, gold's a great indicator here. So the classic safe haven, right? Risk off. And sources show it peaked recently, then dropped almost 10% when money leaves the ultimate safe asset.
It suggests people are feeling a bit braver, willing to take on more risk.
Exactly. It suggests money is flowing back up the risk curve towards things like stocks and, yes, crypto. It creates a much friendlier environment, even if people are still hesitant.
And that hesitation is definitely still there. I mean, you've got the Fed news. You even had that brief U.S.-China trade ceasefire.
Huh?
Bit of geopolitical calm.
A very brief bit. Yeah, let's not get carried away there.
Yeah.
The overall mood is still pretty skeptical.
How do we know that?
Look at the fear and greed index. Despite this huge price jump, the index barely moved. It went from 33 to 35, still deep in fear territory.
Wow. So even with prices ripping higher, the underlying feeling is caution, uncertainty.
Totally. It feels like everyone, retail, institutions, they're watching this rally thinking,
Yeah.
okay, nice move, but is it real? Is the macro shift actually changing the technicals? They need more proof.
Okay, speaking of the technicals, let's talk Bitcoin's chart. It's kind of stuck, right? Moving sideways. If the macro's so good, why isn't it just blasting off?
That sideways action, that's classic tension building. It's like a coiled spring before a big move. Bitcoin's caught in this massive tug of war right now
Between who?
between really strong buying demand down low and equally strong profit-taking up high.
Okay, so where are those lines in the sand? What's the floor and what's the ceiling everyone's watching?
Right, the floor, the key support, is holding firm above $108,000. That lines up perfectly with the 200-day moving average. Big level for institutions.
So big players are buying the dips near 108K.
Sources say yes, definitely strong demand there. But the ceiling, that's tough. Around $114,000 near the 100-day moving average. That's where sellers are stepping in hard, taking profits.
Capping every attempt to braid higher.
Exactly. It shows that. Well, the market is currently balanced, with buyer and sellers evenly matched, turning $110 into the most tense neighborhood in finance.
That sums it up perfectly. A tense neighborhood. So what gets us out of this neighborhood? What's the breakout signal?
Best case, you need to see a decisive daily close above that 114K to 116K area. Break that cluster.
And if that happens?
Then you likely break the psychology, break the resistance. Momentum could kick in pretty fast, maybe targeting $120K, even 122K.
Okay, and the downside risk. What happens if we can't hold that floor?
If we see a sustained drop below $108,000, that's the danger zone. It would mean sellers won this round. And it opens the door to the next major institutional demand area, which is quite a bit lower, around $102,000 to $104,000.
So holding 108K is absolutely critical right now.
Absolutely crucial.
Now, while Bitcoin's fighting this battle, you mentioned some quieter signals, things happening on-chain, especially with whales and Ethereum.
Yeah, this is where it gets really interesting because it kind of contrasts with the price just sitting there. We're seeing this big trend, crypto leaving exchanges.
Like people withdrawing their coins.
Exactly. Bitcoin saw over $2 billion move off centralized exchanges just this week. What are the biggest outflows this quarter?
Wow, and Ethereum too.
Yep, similar story. About $600 million in ETH outflows. Big numbers.
Okay, so what's fascinating here is, what does that mean when coins leave exchanges in bulk?
It strongly suggests long-term holding. People moving coins to cold storage. HO dealing. They're not planning to sell immediately.
So it tightens the available supply on exchanges, reduces selling pressure?
Precisely. It builds a stronger foundation for potentially higher prices later on. It's smart money positioning for the future, basically.
But you said it's quiet accumulation.
Yeah, because while the whales are moving coins, overall network activity, like the number of active addresses, has actually dipped a bit.
Suggesting what? Market fatigue.
Could be. Maybe retail traders are taking profits. Maybe they're just waiting on the sidelines for a clearer signal after all this volatility. But institutionally, the conviction, especially in Ethereum, looks enormous.
Let's get into those numbers because they sounded pretty wild. The institutional money flowing into ETH?
It's genuinely astounding. The U.S. spot ETH ETFs, they pulled in $9.6 billion in net inflows just in Q3 2025.
9.6 billion.
Billion, yeah. And that pushed their total assets under management, their AUM, to $28.6 billion, which, get this, actually surpassed the AUM in the Bitcoin ETFs.
Whoa, okay, that's a huge signal. Institutions are really betting big on Ethereum specifically.
Massive conviction, seeing it perhaps as a unique asset, maybe with that yield component, the non-inflationary aspect.
And the ETH whales are doing the same thing, buying more.
Oh, yeah. Wallets holding between 1,000 and 100,000 ETH. The big guys added 1.64 million ETH just in October.
Valued at what?
About $6.4 billion at current prices. And if you look at metrics like the MVRV ratio.
Which tells you if holders are generally in profit or not.
Right. Staked ETH holders are showing stronger conviction, a higher MVRV, 1.7, compared to just circulating ETH, 1.5. It means the long-term stakers, the believers, have stronger hands right now. They're less likely to sell.
Okay, so let's try and pull this all together for you, the listener. It's a complex picture. We saw this crazy volatile surge, probably fueled by shorts getting wrecked.
Liquidation cascade, yeah.
But it's backed by some serious macro tailwinds. The Fed easing policy, that's historically bullish.
And definitely a positive backdrop.
Technically, Bitcoin's stuck. locked in that high-stakes fight between 108K and 114K.
That tense neighborhood we talked about.
And while that's happening, the smart money seems to be quietly accumulating, pulling coins off exchanges, especially ETH. But overall activity is kind of muted. Market uncertainty is still high.
It really is peak data conflict right now. So to recap those two key truths we found today. First, the cryptocurrency market has just served as a reminder to everyone of how quickly momentum can change.
And second, the technical reality. The market is currently balanced, with buyer and sellers evenly matched, turning $110 into the most tense neighborhood in finance.
Which leaves us with a really important question for you to think about. Given that huge institutional shift towards Ethereum and seeing altcoins like XRP pop, is Bitcoin just consolidating here, letting the alts catch up before the real move?
Or is the entire market just waiting, holding its breath for Bitcoin to decisively break $114,000 before everyone really commits to a bull run?
What do you think? Is BTC just pausing, or is it the key that unlocks everything else?
Definitely something to chew on. And hey, don't forget, if you're navigating these markets, we do have the best crypto referral link right there in the description.
Welcome to subscribe to my channel and like this podcast so that I can continue to make more podcasts.